Some other concepts, cost concepts. The basic cost concept is that the thing which you buy or build, like power plants, etc., the first cost should be cheap, and also when it is operating, it's produce goods and services at the lowest possible cost. There are two distinct merits of figures there. Therefore, we have a fixed cost and we have variable costs. The fixed costs are related to mostly capital costs, but it could be also fixed O&M costs, etc. Variable costs are related to the how many number of units you produce, and according to the number of units you produce, the variable cost will vary. So the fixed cost could be a fixed cost is a cost that does not change with an increase or decrease in the amount of goods or services produced or sold. Fixed costs are expenses that have to be paid by company independent of any business activity. The example of fixed costs include insurance, interest expense, property taxes, and depreciation of assets. Depreciation of asset is also, as I said, that in income statement we have the expenditure shown as depreciation. This is the capital cost which is decreasing. This is the fixed cost. And other fixed costs may be insurance, interest expense, property taxes, etc. They are not related to how much the asset has produced goods or services. The salaries of management, for example, could be considered as fixed cost, whereas the labor cost may be considered as variable, because you can vary the labor according to the requirement. But maybe the management, you keep the management same number of people, employees, they can be considered as fixed cost. The variable cost is that which increase or decrease depending on a company's production volume. They rise as production increases and fall as production decreases. The variable cost of production is the constant amount per unit produced. It is per unit cost is constant. Examples of variable cost are sales commissions, direct labor cost, cost of raw material used in production, and utility cost. So if you produce more number of units, of course your labor cost will be more, your raw material will be used more, your variable cost will be higher.
Doctor, I should be able to use this concept on the project, am I right?
Exactly. In the projects you have the variable costs and you have the fixed costs. So when you are using these cost concepts, you have to take into account these, that what is the fixed cost and what is the variable cost.
And also depreciations of the office equipments and assets.
Exactly.
And then the interest and all that.
Exactly. Total variable cost is the quantity of output multiplied by the variable cost per unit of output. So the variable cost per unit of output is, we can say it is constant, multiplied by the number of outputs. Now the sunk costs. This is interesting. Sunk costs are already incurred costs. And I give you example of sunk costs so that you keep remember it even when you graduate. Because this example students normally remember when after even graduation. Suppose you are a rich guy and you bought a nice villa of 180,000 reals. Okay. A nice villa with perhaps a swimming pool and you know, all the nice facilities there. You bought it for 180,000 reals. You're a businessman. After maybe 2-3 months, your business require money. And you thought that, okay, why not I sell my villa and get my money to put it in my business. When you go to sell it, you found that the estate agents are all telling that it is just 150,000 riyal. It is not more than that. So you are surprised. You bought it for 180,000 riyal just 3 months back, and now you want to sell it, and they are telling you that it is only 150,000 riyal. However, one of the estate agents tell you that he can help you if you do some upgrades in that villa. If you do some upgrades, maybe change some facade of the villa, or put some changes in the kitchen, and do some basement upgrades, etc. I can sell it for about 180,000. But this upgrades, if you do, that may cost you 10,000 riyal. Now you talk to your father, and your father, when he listened to all story, he become angry with you. He said that, what is this? You have already bought 180,000, now you will put 10,000 more, and you will sell it for 180,000. What kind of businessman you will be in future? He is very angry with you. You talk to your mother. Mother says, it's a good investment. You spend 10,000 and you get 30,000, because 150,000 you will be able to sell it for 180,000. So she says that it's a good investment, do the investment and sell it for 180,000. Who is right, your father or your mother? Your mother is right, because the cost which has already incurred is considered as sunk cost. Now if we keep thinking about this cost, the earlier cost, we will make a wrong decision. We have to forget about this cost now. We have now, this cost is good, that we just put 10,000 and we will make 30,000. So the sunk costs are, I can give you examples. In, for example, rural area electrification, you have already diesel generating units there which are producing electricity. Now if you want to put solar PV or wind energy there, what you will do? You will compare this with solar PV capital cost. Their operating cost may be considered zero perhaps, or close to zero, and the operating cost of diesel units. We will not take into account the capital cost of diesel units because they are already existing there. So if you are testing your economy, you will forget about the capital cost of diesel generating units. Similarly, if a hydropower plant is already made, dam is already made, and hydroelectric power, some units are already there, these hydro turbines are there, and you want to put another hydro turbine, you will consider the dam cost as sunk cost. So the dam cost is a major cost actually. If you consider this as a sunk cost, then the only cost you have to consider is for testing the economy is just putting another turbine when you are, let's say, comparing with gas turbine or some other. So this is an important concept of sunk cost. Let's continue. So the sunk costs are already incurred costs, and we should not include them in our economic analysis. Okay. Another concept is a life cycle cost. Life cycle cost is the cost of everything. It is cost of operating, it's initial cost of installing the project, replacement of components when they wear out, regular maintenance, overhaul costs, operating cost, administrative and overhead costs. So you can do analysis on life cycle cost basis. You can also compare the projects on life cycle cost per unit basis as well. For example, you have a nuclear power plant and you calculate the life cycle costs of nuclear power plant per unit cost. So maybe you say that the per unit cost of nuclear is 2 cents per kilowatt hour. Per kilowatt hour is per unit cost, all right? And similarly, if you are comparing it in a gas turbine, maybe it is 5 cents per kilowatt hours. So you can easily compare. Even the sizes of the units of the generating units may be different. One is 100 megawatt, another is maybe 500 megawatt. But still you can compare on the basis of per unit. So life cycle cost concept, yes, 538. Yeah, we will continue. Thank you. Another concept is, okay, now this is a good break here for you people to solve this problem, investing in electrical efficiency. 2 pumps capable of delivering 100 horsepower. So here we have the operating cost as well as the capital cost. 2 pumps capable of delivering 100 horsepower to an agriculture farm are being evaluated in a present economy study. The selected pump will only be utilized for 1 year and it will have no market value at the end of the year. The data is as follows. We have 2 pumps, ABC pump and XYZ pump. The purchasing price is 2,900 here, 6,200 there, and annual maintenance is there, and efficiencies of these 2 pumps are given. If electric power cost is 10 cents per kilowatt hour and the pump will be operated 4,000 hours per year, which pump should be chosen? Recall that 1 horsepower is equal to 746 watts. So please try this problem. So we have 2 pumps here. 2 pumps are there which are capable of delivering 100 horsepower to an agricultural farm, and we want to see which pump is better. This ABC pump and XYZ pump is there, and their purchase price are given, their annual maintenance is given, and their efficiency is given. Output power is the same for the 2 pumps. The cost of electricity is 10 cents per kilowatt hour and the pump will be operated 4,000 hours per year. Which pump should be chosen? Recall that 1 horsepower is equal to 746 watt.
So doctor, I'm assuming there is no discount rate.
There is no discount rate. We are assuming only 1 year of lifetime, and we are not discounting the cost at this present time.
And the 100 horsepower is the output, not the input.
Yes, 100 horsepower is the output of these 2 pumps. So we're going to solve this now. We can find out the operating costs. As you can see that purchase price and annual maintenance are already given, so we don't have to calculate anything there, but operating cost we have to find out. Operating cost of ABC is equal to, and you can see power into time. So power is 100 horsepower, okay, and its efficiency is 0.8. This become input power, right? Input power, and you multiply it to make it kilowatt. So we know that 0.746 kilowatts are equal to 1 horsepower. Now this has become an input power. This whole thing becomes input power. If you want, you can make two steps. First, find out input power, then find out the energy, and then maybe third step, find out the energy cost. But I am doing it in a one step, in a one go. So here we have the input power multiplied with time becomes energy, 4,000 hours per year, multiplied by, we have, what is the cost of energy? 10 cents per kilowatt hours. Now, since we want to work in dollars, we can see that $1 has 100 cents. It's good to work with units also, and if the units balance, we get dollars, it means it's a cost. If the units are not balancing, then you have done a mistake. So you can see from here, cents cancels with cents, hours cancels with hours, kilowatts cancel with kilowatts, horsepower cancels with the horsepower, and we are left with dollars. Okay, and you solve it, you will get the operating cost. Anybody like to tell me? 238? Are you sure? 37,300 dollars. This is the right one. And we have the annual maintenance cost, and so plus maintenance, total cost, I will put total cost here now, just add all these costs. Total cost of ABC is equal to 37,300 plus $2,900 $2,900 plus we have $170, and that is your answer for ABC. You do the same for XYZ and see which one is cheaper. And I suppose that since the heading is saying investment in electrical efficiency, it means that it will select efficient pump.
Doctor, this is only for 1 year.
This is only for 1 year. Yeah. Yes, any questions? Shall we continue? So you can do the rest by yourself. Just find out the operating costs of XYZ, add those costs and compare them and select the cheapest one.